Some members of Congress time the market better than pretty much every hedge fund. Here now to talk about the findings is Gunjan Banerji, one of the authors, also lead writer for the Markets Live at the Wall Street Journal, and a CNBC contributor. Gunjan, I guess this could just be really good timing, but the numbers seem to align pretty well with the markets. What was sort of the core aspect of you and your team's findings?
Thanks, Brian. So my colleagues and I at the Wall Street Journal analyzed more than 6,000 disclosures among House lawmakers over that time frame and found that, more than a dozen of them placed more than 700 transactions. A lot of them were trading in incredibly risky things. Think single stocks, options. There were index funds as well. And what we found was that some of the lawmakers who have called for stock trading bans were actually doing some of the most trading. Think Ro Khanna and Rob Bresnahan. They placed some of the most trades out of anyone else in those disclosures.
What were they trading? You said risky things. Are these risky stocks? You mentioned index funds. Are they doing options? What specifically were in these 700 trades?
It really varied. I was shocked by the amount of options trading going on, Brian. As you and I have discussed, that does tend to be riskier. We saw one lawmaker, pretty much call the bottom in terms of Microsoft's price. While the shares were falling around 4% in early April, he jumped in to buy Microsoft call options, which, for example, would have roughly doubled by the end of May. He dished out thousands of dollars for Microsoft call options. We saw Marjorie Taylor Greene shortly after Trump announced those tariffs. She jumped in to buy everything from Lululemon stock, FedEx stock, Palantir, spending thousands of dollars on those trades. Ro Khanna placed, hundreds of trades in option stocks and index funds. So it really varied. And we saw a lot of lawmakers jump in during one of the wildest stretches for global financial markets of the past decade.
Gunjan, hi, it's good to see you. And count me in for those who don't like the fact that this can all continue. But honestly, it's more because of the appearance of conflict, because we can never know, right? I mean, you go back to early April, and what are we surmising here? That they had inside information about what was going on? I mean, it sounds like they did what a lot of and when we say they, a lot of this is their financial advisors, right? So I struggle to connect the dots to something nefarious, but at the same time, I don't think this should be allowed to continue because of the way that it looks is as bad as whatever actually happened. It's one reason here at CNBC, we don't trade individual stocks, right? So I'm just curious if you can draw a line from inside information to profiting off of that inside information.
Right, Kelly. So as a Wall Street Journal reporter, I'm also not allowed to trade in stocks or options or move in and out of positions. And yes, a lot of these lawmakers did tell us that this was either their family members, their wives, their daughters' accounts, maybe their financial advisors were doing it. What shocked me, though, was the quality of the disclosure here, where, again, my colleagues and I analyzed more than 6,000 filings, and just what lawmakers are required to disclose is incredibly murky. For example, a lot of these positions don't even state this was the exact dollar amount of what they bought or sold. In fact, it's a really wide range. For example, this Microsoft position was between $10,000 and $30,000. Some of the disclosures that we were looking at seemed like they had been printed out and scanned, and it was even tough to make out what was on there. Some of the numbers were blurry, or it was tough to make out whether it was a buy or a sell. And it is tough to draw that line. Was it insider trading? Was it not? But what lawmakers and analysts told us was that this certainly sheds a spotlight on the conflicts of interest that can arise if lawmakers are allowed to trade.